Okay, well, good afternoon, everybody. Hope you all had a good lunch. David, welcome. Great to see you again.
Good to be here.
Yeah. So I want to kick it off by asking what's changed. Because we had a conversation about, it was almost 2 years ago, where you were not all that positive about stablecoins. In fact, you said that you didn't like the fact that there was an intermediary that sort of gets to control the ecosystem. So maybe you can start with, do you still feel that way? And how do you, what's changed in your view? How's it evolved over the last couple of years?
No, I don't think it has changed, actually. It's still the same. And, you know, just to define that a little more crisply, the reality of stablecoins is that they're an instrument to digitalize dollars. And what I didn't like, and I still don't like, is an idea that we're going to have fully centralized stablecoins on top of insufficiently decentralized networks replace our current financial system. And that would be a sad outcome because it means that we're basically recreating the construct of the current financial system, just replacing the players with new players, and you still have humans controlling the network and the asset. And so what we believe is that you need a fully decentralized, neutral settlement network, and when it comes to that, there's no second best than Bitcoin. And then you can settle all kinds of different assets and currencies, whether it's fiat currency to fiat currency, with Bitcoin in the middle, or settle stablecoins as well on top of Bitcoin. And so at least in a world where you have hundreds of stablecoins being issued, which is where I believe we're going, you have a neutral network that behaves like the internet, but for money.
Okay, so then let's talk about that. Like, what you're saying is that the current state of play, most of the stablecoins that we have in play, particularly the two big ones, obviously are centralized, have centralized control to some extent.
All of them, for the rest of time,
all of them.
for the rest of time, will always be centralized, controlled by humans. There's just no way to make algorithmic.
So how are you trying to move them away from that, or are you trying to get new players to come in and use your technology to create new stablecoins?
We're not in the business of like the assets. We're exclusively in the business of making Bitcoin the most efficient settlement network for all things money and value in the world. And it has a lot of good attributes. Like a month ago, we released Spark, a brand new Bitcoin L2 that supports stablecoins natively. And the advantage with Spark is that if you're a stablecoin issuer or you're a payment endpoint on the network, you don't have to pay gas fees with a foreign token. Like if you're like on an EVM chain, typically you have to pay gas fees with Ethereum, but you're moving, say, USDT. Or you're on Solana, you're moving USDC, you're paying gas fees in Sol. With Spark, you're basically paying a fee eventually that will be deducted from the asset you're actually transmitting, and you can actually set all kinds of different interchange parameters that are more geared towards mainstream payments than typically what stablecoins have been able to do on other networks.
So then, are you talking to Jeremy Allaire at Circle and saying you should move everything over to Spark? I mean, well, that's obviously an unlikely thing in the short term anyway.
Look, I believe that with money is like water, it'll always find a path of least resistance, meaning the network that is the most efficient, the fastest to settle, the lowest cost, and that has the most reach will end up getting all the volume. And I believe that Spark will be one of the top contenders for that, on top of Bitcoin, because it borrows the neutrality and trust of Bitcoin, and it has attributes for payments that no other network has.
Right. So then, how are you going to market now? Are you promoting this out to stablecoin issuers today?
Yeah, stablecoin issuers, wallets, exchanges. The beauty with Spark is that it's fully backward compatible with Lightning and of course with Bitcoin. And so it borrows the reach and liquidity of existing integrations into the network. and expands from there. And so, we're not starting from scratch. And that's a massive advantage because you get all of the underlying network effects that already exist.
Right, right. Okay. Okay, so I want to talk about when we were chatting with your team, you talked about this money grid.
Yep.
So I'd love you to kind of play that out and sort of how does that fit in with the vision that you just described?
Yeah. So the money grid is what we like to call the network that we're building on top of Bitcoin that enables all kinds of different currencies to move across different domestic real-time payment systems and banks and financial institutions. So right now, for instance, you can use this network that's built on top of Bitcoin to pull money from a bank in the US in dollars, push it on the Lightning Network to Mexico, where we have a really great partner, Bitso, that takes the Bitcoin, converts it to Mexican peso, pushes it to a bank account on SPAY, the local domestic real-time payment rail of Mexico. That whole thing takes 3 seconds, leaving your bank in the US, arriving in Mexico. It works 24/7 real time. And we have that working in 70+ markets right now, where you can move money from one banking system to another banking system in real time at a very low cost and very low latency. And that's already happening right now at scale. We have very large institutions like Nubank and Revolut and a number of others in Europe and in Asia and Africa that are on the stack or coming on the stack right now. So think of it as a replacement, an open, real-time, modern replacement for SWIFT and correspondent banking for global money movement. And then Spark will enable certain transactions on this money grid to take place using stablecoins in the case that it's actually same currency to same currency transactions, or if a consumer on the other side would actually rather hold dollars than their home currency because it's a better currency.
So it sounds like what you're saying is you're agnostic to the mechanics of how the money moves, or as far as whether it's a stable coin or whether it's actual fiat currency. Is that fair to say?
Correct. So the money grid and the network we're building is currency agnostic, the same way that the internet is content type agnostic.
Right.
And for us, a stable coin is like another money content type. But it could be fiat currencies at the edges, it could be Bitcoin, it could be stable coins, it could be any other proprietary token that anyone comes up with. It doesn't matter. For us, we're building the most efficient, low-cost, real-time settlement layer in the world on top of Bitcoin.
So then, you talked some of the names you mentioned there. A lot of the use case obviously is cross-border. Is that just the low-hanging fruit because there is so much friction and cost and it's slow, the SWIFT network has lots of expense? Is that kind of where you're focused now?
Well, look, when we started Libra at Facebook, the project, in early 2018, the world was very different. Domestic real-time payment systems really weren't a thing.
Right.
And so you still didn't have FedNow or RTP in the US at scale. You didn't have PIX in Brazil really at scale. You didn't have SEPA Instant in Europe. Now the entire world has domestic real-time payment systems at scale, which are very low-cost payment systems for domestic transactions that everyone uses. But the job to be done, that remains to be done, is how these domestic real-time payment systems interoperate with one another. And that is still unsolved, still depends on correspondent banking and SWIFT, still takes 3 to 5 days to clear, $50 a transaction, can't work on a weekend or after hour, and on a bank holiday. And so, this is insane that we're still in this state of things
right,
in
so
2025.
It's a good point because if money is like water and is always looking for the path of least resistance, and we've had this technology. Obviously it's changed a lot in the last 7 years, but we have had the capability to replace SWIFT for some time, and yet we have not been able to do that yet.
Yeah.
But are you saying that it is inevitable?
Of course.
Yes.
It's like asking, if we're still sending faxes, after the internet, we're not doing that anymore. Maybe, to send labs from an old doctor's office, but that's pretty much the extent of it. So I think, look, here's the problem, and here's why Bitcoin is the only way, literally the only way to make this happen. think about it this way. If you're building a network that's dependent on a single centralized stablecoin, the same way that Libra was dependent on a single centralized stablecoin, no matter how hard we tried to decentralize it, and you're becoming the core interop network for countries like Brazil or Europe or Mexico, and it's a dollar stablecoin, fully centralized, fully controlled by an American company with an American CEO, and now you're like basically the gatekeeper of 40% of the in and outflows of these countries. How do you think this is going to end? The same way that it ended with Libra. We just projected that fear in the future because it came from Facebook, and so the fear basically resulted in all of the regulators and central bankers living in that potential future for stablecoins. So the only way that you make it happen is using an asset, a neutral settlement asset that's neutral and decentralized enough, that doesn't have a giant flag on it, that is not controlled by a corporate CEO, and the only thing that fits the bill is Bitcoin. And then on top of that network, in some cases, you will use digital money, stablecoins, instead of just converting in and out of Bitcoin and settling in fiat at the edges. And I think that that's the way it's going to work. There's just no other way.
So what about scale? I mean, are you at Visa, MasterCard scale today?
The technology definitely supports that.
Okay.
Now it does. It didn't a few years ago, but now it does.
Right. So how do you think the governments of the world, like you've mentioned Libra a couple of times. I wasn't going to bring it up, but you brought it up. I wonder how, if let's just say you're wildly successful, and there's 5% of GDP flowing through your network that is, you're talking $1 trillion+ now flowing through the network, that the government sort of doesn't get to really call any of the shots, doesn't control it, doesn't really. It feels like it's something that they can't really. Well, they can't control it in any way.
So they can actually, and that's the beauty of the network, the way that it's designed, which is that if you're in Brazil, you're going to control the laws that actually regulate how institutions connect to that network, perform AML checks, do all of these things. But when it leaves the country, it's this neutral network that is, irreplaceable, because you can't recreate it if you're trying with a bunch of humans at this point. And it's neutral, and as such, it's acceptable versus no, it's an American company intermediating all of the ins and outflows of Brazil, not going to work. And it needs to be neutral. There's just no other way. By the way, you said our network. It's not our network, it's Bitcoin.
Right, okay.
And that's the beauty of it. And the beauty of Bitcoin is its neutrality and the fact that there's no second best when it comes to neutrality and decentralization, and lack of human control of the underlying settlement network that we're building.
Right.
And so I think that's the key aspect of it. And that's why we're actually going through all of the pain of building pretty hardcore tech with Spark and making Lightning scale and all of these things that is way harder than combining a bunch of stable coins on top of existing chains and just orchestrating them, which is just the top layer. We really want that open, decentralized money network for the world, and it can only exist on Bitcoin, we believe.
So then, if you say it's inevitable that it's going to happen this way, and today it is not happening this way, at least not at large scale, what's missing? What needs to happen for you to get to that 5% of GDP?
Yeah. So let me break it down in a few distinct pieces. First of all, Bitcoin couldn't do all these things. So, even if you go back a month ago, issuing stablecoins scalably, reliably on top of Bitcoin wasn't a thing. You can't do it. We tried on Lightning for a while as well, and the fact that Lightning is a channel-based payment system enables, it prevents you from actually scaling it, because you have to configure every channel for every asset between all of the counterparties. You need to put liquidity, and it's not going to work, basically. So Spark solves that for stablecoins. Then you needed to scale Bitcoin real time for self-custody wallets. Spark also solves for that. Then you need to actually go in every single country and make the network compatible with all of the domestic payment rails of every country, which we're working on as well, but we're not the only ones working on. Like everyone here is working on building on and off ramps for digital payments networks that are built on top of various networks in all the countries in the world. So coming together to actually build that is really important so that people can actually move money from their bank accounts and their wallets onto these networks and move money digitally 24/7. And so all of these things need to happen for the 5% GDP to actually travel on top of a network like this. It's a lot of work.
Yeah, it is a lot of work. So what about domestic use? I mean, beyond cross-border, I think we all get, and obviously there's lots of money being moved today in stablecoins, across borders. But what about domestic use cases? Do you see this as a major domestic payment tool as well?
Not right now. I think, like, forget Bitcoin and all of the network talk, but like right now, replacing Zelle and Venmo and PayPal and Cash App in the US has very minimal net new utility for consumers. Like maybe there's a way to interoperate all of these things that are not on the same standard. You have Zelle for the banks and then you have the wallets. But like, that's on the margin. I think there are really good use cases for enterprise money movement, minimizing collateral risk in institutional trading with stable coins and all these things. But why would someone use a dollar-denominated stable coin for a domestic payment in the US? I don't know.
What about micropayments? We still haven't solved micropayments, which I think is crazy.
Yeah, no, I agree. I think there are a number of use cases here. Like one of the first demos we did when we launched Lightspark was a streaming payments demo, where a creator of a video could actually receive payments as people watch the video in real time in sats, basically in small denominations of Bitcoin. So those types of things could work. I think the hard part is actually reinventing the systems around settlement of money, not the actual settlement for micropayments to actually take off. So there's a whole downstream work stream, so to speak, that needs to actually take place for that to happen.
Right. So what about banks? You mentioned Revolut, Nubank, these are really fintech companies. Are you talking to traditional banks today?
Yes.
About what?
About global payments and look, if you're not one of the major 4 or 5 banks in the world, you don't really like the correspondent banking system. There's one time in the world, in your existence, one or many times where it screwed you in one way or another. You got sidelined. You had to go find new partners for correspondent banking. It's costly. You don't control the rules. It's controlled by a bunch of people that you don't have any influence over. So for digital banks, it's actually really, or for digital first bank or digital leaning banks, it's actually really compelling to find a way to net settle global money movement with other like-minded banks in the world and to replace the old system. And so there's definitely a lot of pull there.
So what geographies are you looking at outside the US, obviously, where are you getting traction?
So we started having a ton of traction in Latin America about 24 months ago.
Okay.
So that's where it really started, because lots of digital banks, lots of adoptions of crypto. We were still in pretty uncertain territories here in the US at that time. So that's where it really started. So Latin America, now the US, Europe, Southeast Asia, Africa are all the places where we're seeing traction right now.
Right, okay. And so if the stablecoin bill that's in Congress right now gets passed in some form similar to what it is, then you'll be able to have banks issuing their own stablecoins.
Yep.
Are you really competing against that, or are you thinking this is an opportunity where you want to issue your own stablecoins, do it on our technology?
Yeah, no, it's a great opportunity. I think also, this is the most fascinating thing to me. It's people are very confused, and probably not in this audience because you're at the stablecoin conference, so you probably know what you're talking about, but outside of these walls, people confuse stablecoins with, a whole network. So stablecoins are a way to digitalize or digitize dollars. They're not a way to digitize dollars and move dollars. Those two things are different things.
Right.
And so you need a network to actually move stablecoins. Stablecoins don't move on their own. And so that's where we come in. So more stablecoins issuers wanting to actually digitize dollars to move them on a more efficient network is a good thing for us because we think that we are building the best network for stablecoins. So ultimately, having more issuers, having more activity, having more banks that have a willingness to connect onto these new networks is a net positive.
Right, gotcha. Okay, so then when you're looking out, you work with Coinbase today, right?
Yes.
Like they're on your website.
Yeah.
Like, who are some of the other, I would call them institutional type players like that you already have relationships with?
So we have many exchanges for Lightning and that use our stack for fast Bitcoin money movement. And then on the real money movement that uses Bitcoin, the network, as a settlement layer between domestic payment systems, we have many partners around the world, including Nubank in Brazil, which has over 100 million customers. We just announced Revolut a few weeks ago that are coming on the network for Europe. We have a number of other existing banks and others in Europe and in Africa that are coming on board now. Some here in the room, I don't know where they are, but and so we have a reach of about 70 countries where we can net settle between institutions from their home currency into another currency through a variety of digital banks and wallets. And we'll soon have more news in the U.S. with also very large players that are finally now feeling comfortable enough, even though they're banks and regulated institutions, to come on the network.
Right. So it's good timing for you in many ways because you've sort of fairly recently announced this technology, and I mean we're here at Stablecon, but I think most people just in general fintech would argue that outside of AI, the hottest area that people are talking about is stablecoins. So this feels like a unique moment, a unique year in sort of the history of, or the recent history of finance. I mean, do you see this is your year to really get significant or get much more traction?
Oh, for sure. It's like an alignment of stars that we haven't seen in ever, I think, in this industry. So it's really that this is showtime.
Right. So then what should we expect coming out of you guys? Like, if you can give us some sort of a window into what we can expect from you guys over the next 12 to 18 months as far as new releases, new features, that sort of thing.
So you'll see a lot of new stablecoin or new or existing stablecoins coming onto Bitcoin for the first time. You'll see more announcements of banks and financial services coming on the network. You'll see more wallet activity on the self-custody side of things on Bitcoin and stablecoin on top of Spark coming up. And this was not the original intent for Spark, but there seems to be a nascent DeFi ecosystem building up on Bitcoin for the first time on Spark that we're very intrigued by. I mean, it's an open network, so anyone can build whatever they want. So I think that's actually going to bring a ton of volume to the Bitcoin network, a ton of transactional settlement volume on top of the Bitcoin network that hasn't existed on the network at all until now. So that's also an exciting development.
So then, do you feel like all the layer 2s that are on Ethereum are going to have less relevance going forward, or do you see it sort of happening in tandem?
I mean, I think it's different because I feel like Solana or EVM chains have more smart contract capabilities to do more fancier things, so to speak. And Bitcoin is really going to be the most decentralized, most neutral, most efficient settlement network for value. And so it will play that role better than other chains, but if you're looking to do fancy things or fancier things, then maybe other chains will be better.
Right. Okay. So I want to end with a little bit of a lightning round, if you would, just to sort of keep you on your toes here at the end of our session. So, okay, what is the Lightning Network's biggest remaining challenge?
Self-custody wallets and stablecoins, which is solved by Spark.
Okay. What is the biggest misconception about stablecoins today?
That it's a payment network.
Okay. One sentence to describe Bitcoin's role in global finance in 2030.
Universal, neutral settlement network for all of the money in the world.
Okay. And last one. What is going to be the size of the stablecoin market? And keep in mind, we had in the opening keynote, they showed it was like 230 billion or roughly there today. What will be the size in 2030?
So this is actually an interesting thing. I don't mean to like get out of the lightning round mode, but I feel like what's more interesting to me right now is not like the TVL of stablecoins.
Right.
It's actually, can we actually have like real mainstream payments use cases that start to make a dent in global retail payments? And if you look at SWIFT and correspondent banking, which is slow, takes 3 days to clear, is like really archaic, as it's like 50 plus years old, it's moving $5 trillion a day.
Right.
So I'd be more interested in like seeing what is the volume, the TPV for real payments use cases, and for us collectively to start really making a dent.
Right. Okay, we'll have to leave it there, David. Great to chat with you.
Thank you.
Thank you very much.
All right, awesome, thanks.
Yeah.